Good morning, guys. It is Wednesday, July 3rd, 2024. This Bathrobe business. I got my coffee and I got the news. Today we're going to be talking about private payrolls. We're going to be talking about jobless claims. We're also going to talk about home affordability and Southwest Airlines. So let's jump into it. First thing I'm going to talk about is payroll. ADP published their payroll numbers and it came in under estimates. I think this is kind of a pointless story. I don't know why we're still reporting ADP numbers when they have been wrong all year long. They have not come in on target or off target. I should say they've been off target this whole time. They're either overestimate, that happened one time, or they're underestimate. I'll share the numbers. We were expecting 157,000. It came in 150,000. So let's move to the article. Now, I think one thing noteworthy here, and something I think is actually a good indicator of what's actually going on, is we're going to see a bump in payroll numbers. So the real payroll numbers from the Labor Department come out on Friday. And ADP has been undershooting the numbers all but one time as far as the year goes. But I think one of the biggest indicators here is leisure and hospitality. So it's not surprising that is going to surge in the summer for June numbers. Obviously, more people travel during the summer than they do during the winter. That we're expecting this number, but leisure and hospitality has been more or less a leader in job creation for the last year or so. Pretty much coming out of COVID, this has been on the forefront of creating new jobs. Now, there was a dip in this category last month and the previous month, but it seems like we're back on track. Why I think this number is important is I always look at leisure and hospitality as a means of disposable income. If this sector is growing, that means disposable income is still very high. So the fact that this is the largest growing sector according to ADP numbers, I think is going to show the fact that the economy actually is doing very strongly, despite what some people may think. I think this shows that there's still a lot of disposable income in the market and people are still spending on travel and leisure, hospitality and leisure. Construction followed suit at 27,000. So I think that is a good indicator of where the mortgage is, the home construction is, et cetera. But I think the leisure and hospitality is the biggest takeaway here from this story. Now, to counter that, I will give the opposing view. So jobless claims are actually up. So jobless claims, I think, they stay near a one-year high, and layoffs are continuing. So this is a story from Market Watch. Let's see. Last week, the jobless claims rose to 238,000, keeping them near a one-year high. This is the largest increase in New York, New Jersey, and California. Obviously, those markets are going to dominate the jobless claims period. I think there is softening in the sector. I don't think it is as hot as it used to be, but judging from personal experience, from being a business owner or somebody that hires all the time, I can tell you it's still very hard to find people. We're hiring for two positions officially, have been for about a month and a half now, have yet to fill them. There's one position I'm hiring for unofficially because I kind of gave up on finding someone. So currently we don't even have ads posted on it because it was kind of pointless to go through resumes every morning to see unqualified people. So I think that's kind of the disconnect here is a lot of these jobless claims I think are from unskilled labor where there might be a little bit slowdown in a particular market. That's why these layoffs remain high. I think anything that is slightly a skilled labor, anything that is a professional position, anything where you have some sort of trading or licensing, you're going to be doing quite well. So I don't really take too much of this number into any of my thinking as far as thinking that the economy is doing bad. I think this is just a blip and nothing more. I know from personal experience, I can't hire for many of these positions. And so I'm not too concerned about the job market. I think it's actually very strong. Next story let's talk about is home affordability. So homes affordability in the U.S. sinks to the lowest point since 2007. It's just talking about how a person's average income is housing is taking up about 35% of their income, and we want to be near a 30% mark. So this isn't a surprise, but I think this further shows the fact that we should not be lowering interest rates. Despite all this, despite the high interest rates, housing prices have not dropped. Even commercial real estate prices have not dropped despite the fact of what's going on in commercial real estate. There are several properties I look at in Utah that have actually gone up in price in the last year. And despite the fact, and these are commercial properties, I'm not talking about residential, because we are in the business, we do look at certain commercial properties from time to time for our own business or just kind of, Googling, interested, going on Redfin. And there's several properties that I've looked at over the years that have just actually increased in price, despite the fact that they've been vacant for years, despite the fact that no one has moved to purchase them. They're just steadily increasing their price in relation to inflation. A good example is there's this old theater out in Magna. So if you're in Utah, you know Magna, Utah. There's this old theater out there that used to be selling for 500, then it became 550, and now it's currently on the LoopNet for 600,000. There's no justification for this. It's an old, abandoned, broken down theater. It probably needs to be torn down, and even its land is actually kind of awkward and kind of small. There's not really room for parking, despite the fact that it's a movie theater. And despite all that, its price has just steadily increased. So this, I think, just further illustrates the fact that we're still in a bubble. And I do not believe this ridiculous story that's being peddled by the housing elites that, oh, if we lower interest rates, that will somehow lower prices, because then all these people that own these 3% mortgages are all of a sudden going to start buying and selling. That is ridiculous. There's never been an occurrence where cutting interest rates has led to a fall in housing prices. It's actually going to raise housing prices. Let's look at it this way. If you've got a house that you've been wanting to sell for $500,000 and all of a sudden interest rates fall 1%, you can now actually raise your price a corresponding amount because people will still pay for it, or not even a full corresponding amount. Let's say you add another 50,000. It's actually going to benefit you, but not really hurt the buyer, because from the buyer's perspective, oftentimes their monthly payment are set more by interest rates than they are by principal. So the individual is still going to see a reduction in their mortgage payment, but you're going to see an extra 50,000 in your pocket. It just doesn't make sense. So it is going to lead to higher housing prices. There's no way to argue that it won't. We'll see what happens with that, but I strongly always discourage any cut in interest rates. We should be hiking. I say that on a daily basis. Last story I'm going to talk about is just an interesting story in regards to Southwest Airlines. So Southwest Airlines is in the middle of a what do you call it? A proxy war. So there's an activist investor, Elliott Management. Let me go to that story. Why can't I click on it? So Elliott Management has been trying to take over Southwest, trying to push out the chairman and the CEO. What they're calling for is changing up the entire structure of Southwest. So Southwest is very famous for open seating. They don't have classes. They don't have, any deviation in ticket price, no assigned seating, etc. So this group wants to come in and make it more of a traditional airline, change up the seating options, change up the flight paths, move into different cities. So Southwest has been fighting it for a while. And what they did is this poison pill. I've never heard of this. That's why I think it's interesting to talk about. So what this poison pill is. So Elliott Management has roughly 11% in Southwest. And now they're going to institute a rule that if any investor acquires at least 12.5% of the company, then all the other shareholders will have a right to purchase a share equivalent to their own for half the price. So, for example, if Elliott moves to 12.5% and I own 5 shares of Southwest, I will be able to buy another 5 shares, but at a 50% discount. So essentially, we would all be diluting Elliott Management's stake in the company. Now, obviously, this is a bad thing because it can lead to a depressed market. It's going to dilute their value, and Elliott could just still come in and buy more because they will also have the right to purchase at a 50% discount. But it makes it more costly for them, and it reduces their control of the company. Again, all the stories are in the links below. All the links below are in the description, I should say. But Elliott is not a joke. So these are a major hedge fund. They've been around for about 5 decades and only reported 2 losing years in 5 decades. So I don't know if they're going to gain control of Southwest, but their record is pretty aggressive and usually fairly successful. So we'll see what happens with this. They have they have also mounted campaigns at other companies such as AT&T, Salesforce, and Texas Instruments. Texas Instruments being a big manufacturer here in Utah. So I thought that was an interesting maneuver. I thought that was worth mentioning to you guys. That's pretty much it. I'll probably be off for the 4th tomorrow. I'm not working, obviously, but the market's going to be dead, so I figure there's no point to do a video. So I'll probably see you guys back here Friday. I hope you have a productive day, and I'll see you Friday morning.